Hi everyone. In this video, I'm going to do an earnings review of Upstart's fiscal year 2022 fourth quarter results. The artificial intelligence infused lending company is struggling as investors worry that consumers may start defaulting on their debt in greater percentages. So let's look at how the quarter evolved for Upstart. Overall revenue decreased by 52% in the fourth quarter to 147 million. This is a big turnaround from a company that was experiencing rapid growth for several years. The loss per share of 67 cents worsened from an earnings per share of 61 cents in the same quarter last year. The company said that lending partners originated 154,000 loans totaling 1.5 billion across the platform in Q4. This was down 62% from the same quarter of the prior year. Conversions on rate requests were 11% in Q4. That was down more than half from 24% in the same quarter last year. So moving in the wrong direction here for Upstart. The company uh, tries to be a platform where it brings together borrowers and lenders and just takes fees for bringing them together. But the trouble with that business model of late has been that it hasn't been able to get lenders to lend on its platform. Lenders have pulled back dramatically. It's still got consumers coming to its website looking for loans, but lenders have really pulled back. And that's because they fear that consumer budgets and consumer balance sheets are worsening as inflation is pinching their budgets. We've seen data come out that default rates are rising on car loans, on home loans, on credit cards. So lenders are smartly pulling back the amount they lend right now as consumer balance sheets have tightened, have gotten worse. And so to make up for that, Upstart has stepped in and used its own money to fund some of these loans, which goes against really what the business model was intended to do, which is to just be a platform that brings together borrowers and lenders. And so what this has done is highlight the difficulty of this business model in the long term prospects of this business model. Can it really persist through economic cycles, or is it always going to have this problem where lenders will pull back right when there is any sign of trouble, and that leaves Upstart to have to fund all of the consumer loans? So cash flow from operations was negative 675 million in 2022 compared to positive 168 million in 2021. Another dramatic turnaround in the wrong direction. Um, Loans on its balance sheet soared to 1 billion. This was up from 252 million at the same time the prior year, and this was alluding to what I mentioned a little bit ago where Upstart is having to step in and fund these loans and hold them on its balance sheet. So this means that if consumer defaults increases, they're going to be holding the bag on a lot of those losses because they funded a lot of these loans in recent quarters. So it's the company, the stock has gotten significantly more risky in recent quarters because of that fact, because it's turned from that asset light business model where it just steps back and lets lenders and borrowers kind of meet together to being the one that's doing the lending. So that's increased the riskiness. And as I often say on this channel, all else equal, when a company increases its risk, that causes the stock price to come down. Risk is inversely associated with the stock price, right? So when risk comes down, stock price goes up. When risk goes up, stock price goes down, all else being held equal, right? Just looking at risk. So that's what's been going on with Upstart as lenders have pulled away from the platform. Upstart has stepped in using its own money to fund, and that's causing the riskiness of the company to increase. Upstart is forecasting Q1 revenue of 100 million and a net loss of 145 million. So it expects the pain to continue. A sequential loss. Look, fourth quarter revenue of 147 million is going to fall to 100 million in Q1. So it's just going backward. Risk is increasing. This is becoming a riskier and riskier investment. All right, so that's all I've got for this video. As always, I truly appreciate your viewership, and I hope you'll see me next time for another video. Thank you for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.